In trying to do what you do as well as you can for your clients, do you need to have an opinion about whether the S&P tests those lows in June or whether this is a bear market rally or a head fake for the bulls? Do you need to know that? Do you focus on that or not?
I don't. That's more technical. I mean, it is part of the formula to say, hey, how fast did the market go down? How fast did it go up? But at the end of the day, it's going to be fundamentals that matter. What are earnings estimates going to be of the specific companies that we own? And today, it looks like, some of these estimates are going to have to come down. So some of the stocks, in some of the sectors have reflected it, the financials, the industrials, but you still haven't seen that in some of the other sectors. So there's a bifurcation in this market right now. And given where rates are, if rates keep on going up, which we expect them to do, I think you're going to see some more earnings estimates come down pretty drastically. So
you basically, over time, can add to positions in industries or names that you think at some point will flourish. And what are those right now?
Yeah. So for example, look at a company like GE, which is completely out of favor. Most people don't want to look at it because they're about to break up into three different parts: aerospace, renewables, healthcare. The sum of the parts is greater than the whole. I mean, the aerospace is bigger than what the company is. So I think there's a stock that trades at a multiple that we like. Edison Electric trades at 15 times earnings, growing 7% a year with almost a 5% dividend yield. Those are kind of under the radar. People don't want to touch them. So we like those type of stocks, especially now, Joe, as you see this volatility going into Friday. What's Chairman Powell going to say? Everybody expects rates to go up. So I think at that point, with more market volatility, you get to add to positions and even new positions for clients who don't have it.
Do any of the great tech names that are now on sale still from some of their best levels during the pandemic, or do you put clients in any of those, any that you'd be doing right now?
Yeah, I would do starter positions. I think Google has a great cash flow machine. If you're going to go value, Meta has some great opportunities, but that's going to be really volatile. So that depends on the risk profile of the client. So I think those are two kind of interesting plays. And I think Amazon is actually really interesting at these levels because they're really getting into a lot of other businesses and really not focusing that much just on the retail, but with AWS and a whole bunch of their other businesses. So there is value there, but I do think the opportunity is going to be in a lot of other specific stocks as well, because these are still a really large part of the index. So I think if you can look and get value, whether it's in the financials or the industrials, some of the consumer staples, and then some just out of favor stocks, I think that's kind of where the opportunity for the next couple of years is going to lie.